Hello, my name is Janet Stevely, and I'll be your instructor for this session, which provides an overview of Veterans Administration, Department of Defense, and Social Security Administration benefits. I work for a company called Griffin-Hammis Associates, which provides training and consultation nationally and internationally around what we call customized employment. Customized employment is a strategy for helping people with disabilities identify their interests, strengths, and conditions for success, and match those unique contributions to work opportunities in their communities, whether that be wage employment or self-employment. In this lesson, we'll focus on government benefits that veterans with disabilities may receive or be eligible for, and how earned income might impact those benefits. We'll be reviewing several benefits during the sessions. We've also developed a guidebook in collaboration with the Institute for Veterans and Military Families, which provides additional detail on some of the benefits we'll talk about today. I've provided a link to the guidebook titled Navigating Government Benefits and Employment, a guide for veterans and those who serve them, so that if you'd like more information, you have a resource to go to. In addition, if you'd like help with benefits questions or issues, let your contact at IVMF know, as we are available to help through the Post-Employment Supports Program. Today's goals are, first of all, to provide an overview of the three main cash benefit programs, which are VA disability compensation, military retirement, and Social Security disability insurance, or SSDI. Plus, I'll touch on the new Caregiver program, pension, and supplemental security income. The second goal is to review eligibility and the impact of work and earned income on these benefits. And third, we'll also explore policy sources for these benefits so that if you need to research specific information, you'll know where to find it. One time I was heading to an EBV on-site boot camp and was asked, what do government benefits have to do with business startup? And it's a great question. Government benefits can help in business startup in several ways. First, and the most obvious way, is that benefits can provide money for living expenses while veterans are in business planning phase or an initial startup. So this is really an advantage that many new business owners don't have. At least some regular income might be coming in while you're getting the business started. And that income might allow some of you to spend the time needed to really research your business idea and establish feasibility and further develop your business plan rather than having to quickly find a job just to cover bills. Secondly, government benefits can help stabilize income in early stages of a business when you may not be making enough to live on. So in many cases, those benefits aren't impacted by earned income and could continue. Third, government benefits might help you access resources that can assist business startup. Sometimes your eligibility for certain programs makes you eligible for other services. So, for example, being eligible for VA disability compensation could make you eligible for vocational rehabilitation and employment services through the VA. Or similarly, receiving Social Security disability insurance makes you eligible for services through state vocational rehabilitation. We'll talk more about these resources in the third session, but know that some of these programs are tied to being eligible for cash benefits. Fourth, government benefits are often linked to health insurance, which can often make or break the possibility of starting a business. And lastly, the benefits might possibly be available for family members too, either cash benefits or medical coverage that will help with family expenses during business startup. You'll see on this slide that the primary cash benefits available to veterans with disabilities and through either the VA, the Department of Defense, or the Social Security Administration. The Veterans Administration provides three different cash benefit programs: the VA Disability Compensation Program, the VA Pension Program, and there's also what's called the VA Family Caregiver Program, which is a little different, but let me say first, the VA disability compensation is a benefit provided to those with service-connected disabilities, while the VA pension is a needs-based cash assistance program for veterans who are over age 65 and who are totally and permanently disabled. The third one there, the VR Family Caregiver Program, can also provide a cash stipend to family members supporting a veteran with disabilities in certain circumstances. The Department of Defense also provides cash payments for those who meet criteria for military retirement, either based on years of service or based on disability. And the third agency, the Social Security Administration, offers 2 additional cash payment programs: Social Security Disability Insurance, or SSDI, and Supplemental Security Income, or SSI. SSDI is a disability insurance payment for eligible workers who have contributed to the program through paying FICA tax. SSI, Supplemental Security Income, is a financial assistance program that provides cash payments to individuals over 65 or those who are blind or disabled who have limited income and resources. Let me go back. Both SSI and the VA pension program are based on financial need. So the 3 programs I'm really going to focus mostly on today are the VA Disability Compensation Program, military retirement, and Social Security Disability Insurance. Because first, since all of you have service-connected disabilities, you would be accessing this VA disability compensation instead of pension, most likely. And likely the income you receive from the VA might make you ineligible for SSI. So I'm not going to spend a lot of time on those 2 programs, but know that if you have more questions about these or other programs, we'd be glad to discuss them with you, or there's more information in the guidebook. So we'll start with benefits available through the Veterans Administration. And VA disability compensation is a monthly cash payment made to veterans with service-connected disabilities who were discharged under conditions other than dishonorable. And a service-connected disability means that the disability was incurred or aggravated in active service or in the line of duty. The disability can be physical condition, such as a back injury, or a mental health condition, such as post-traumatic stress disorder. VA disability compensation is an entitlement program and is not means tested, meaning that other income or assets that a veteran has are not considered when determining eligibility. Sometimes where veterans may have trouble with qualifying for VA disability compensation is if it is difficult to establish service connection. So this is a benefit for those with service-connected disabilities only. And there are various ways to establish service connection. Direct service connection is when a direct injury or illness occurs during a qualified period of services. So for example, if somebody lost a limb or vision in one or both eyes due to an explosion during the military service, so that's a direct service connection. Aggravation is if a medical condition existed prior to military service but was worsened as a result of service that might indicate service connection. So let's say a veteran had a knee injury playing sports in high school, but had been through physical therapy and the knee was fine until it was aggravated during military service. And that might be an example of aggravation. Presumptive service connection is usually when someone acquires a disease known to be caused or specific exposure while on military service. So probably the best known example is Agent Orange, which we know exposure can lead to various medical conditions. Secondary service connection can also be established if a disease or injury can be directly attributed to a primary service-connected condition. So, for example, if somebody had a right knee injury that was a result of military service, but then they started having trouble with their left knee or their back due to an altered gait, that could indicate that the condition was secondary because it resulted from the primary service-connected disability. And that last one is referred to as Section 1151. It's the final way that service connection could be established. And it's when a veteran is injured in a VA medical facility, that might also qualify you for service-connected disability. Cash benefits paid through VA disability compensation are based on the rating a veteran receives after being evaluated on the VA schedule for rating disabilities. The VA has a complex system for assessing and rating disabilities, which provides a rating of 0 to 100%, rounded off to the nearest 10% increment. So it's either 0%, 10%, 20%, 30%, you get it, up to 100%. The rating system has very specific guidelines for how disabilities are rated based on the U.S. Code. The ratings can be cumulative, so having multiple impairments or conditions can increase your ratings. And the rating system is designed to calculate the impact of disability on earning potential. So higher disability ratings are assumed to have more adverse effect on future earnings. A 0% rating acknowledges that a disability exists and that it was service-connected, but that it has minimal or no impact on future earning potential. So for instance, if somebody incurred a hearing loss while on active duty, but with hearing aids that have been provided that amplify sound, and it's not expected to impact future earnings potential, then a 0% rating might be given. Compensation amounts are directly linked to disability rating. So the higher the rating, the higher the monthly cash payment. For example, in 2019, disability compensations for a veteran with no benefits would range from just over $410 a month for a 10% disability rating to over $3,000 a month for a 100% rating. And there are additional payments for spouses and dependent children. So there is a link at the bottom you can go to for specific amounts that you might be eligible for if you're interested. And in some cases, special monthly compensation may also be available due to severe disabilities, such as loss of the use of a limb or organ, which is called special monthly compensation. As I noted before, multiple disabilities can have a cumulative effect on the disability rating. So the VA uses a formula to determine the rating, often referred to as VA math. And you've likely already found that VA math is not simple addition. In other words, 60 plus 30 does not equal 90. So rather, the VA rates efficiency based on the impact of disability. So for instance, in the example on the screen, you'll see that a veteran whose highest rated disability is rated at 60% has an efficiency rating of 40%. So 100 minus the 60% disability rating would make them 40% efficient. And when the second disability is considered, they also look at the efficiency. So in this case, they've got the second disability had a 30% rating, which leaves them 70% efficient. And what they do is they multiply the efficiency ratings. And you'll see here 40 times 70 equals a 28% combined efficiency rating, or if you subtract that 28% from 100, a 72% combined disability rating. So in this case, the veteran would be compensated at 70% because it would be round down. But a change in disability rating can change the compensation amount, obviously. So if disability has not stabilized, or if the person is reevaluated for additional or worsening disabilities, a higher rating could increase the compensation amount. And the same is true if a rating could be reduced due to medical improvement. The compensation amount could be lowered. Several tools are available to help with calculating combined disability ratings. The chart above shows an example of how additional disabilities affect the combined disability rating. So you'll see in this example a veteran with 4 disability ratings for 4 different conditions. One rated at 50%, one rated at 30%, one rated at 20%, and the 4th one rated at 10%. But the combined ratings based on the VA math formula calculates those disability ratings. With all 4 of them, it would have been calculated at a 75% disability rating, which would be round up to 80%, because again, they only do it in 10% increments. And so they'd be compensated at 80%. The lower chart in blue is an interactive tool where you can enter your own ratings to determine the combined effects. So this might be particularly helpful if you think one or more disabilities might be underrated, and your decision to pursue having it reevaluated may in part be impacted by understanding how it will impact your overall rating and your compensation amount. So if you go to this link here at the bottom, you can get to this interactive tool. And compensation amounts are directly linked with disability rating. However, there is one exception that we're going to talk about called individual unemployability. Individual unemployability, or IU for short, is a disability rating based on one's inability to secure or follow a substantially gainful occupation as a result of their service-connected disability or disabilities. IU offers the maximum compensation amount to veterans who may have a lower disability rating, but who cannot work. So they receive the same payment as someone with a 100% rating, even though their actual disability rating is lower. So to be eligible for IU, you must have at least one disability rated at least 60%, or a combined rating of 70% or greater, where one disability is rated at least 40%. IU not only results in increased cash benefit amount, but health insurance could be impacted as well. It can extend coverage to children and spouses if the IU is considered permanent and total. But because earning capacity is a factor in the IU determination, increased earnings can affect eligibility. So we'll come back to this shortly. The IU rating is, because it's based on the inability to follow a substantially gainful occupation, which is defined as not being able to earn the amount of money that someone in a similar occupation in the same community would earn. Because IU is based on the presumption that the individual cannot sustain substantially gainful occupation, then working and earning wages or income from self-employment could impact their continuing eligibility for IU, or individual unemployability. Certain exceptions apply though. One exception is those who work but earn less than the annual poverty level. Minimal earnings would be considered marginal employment and would not impact the IU rating. The federal poverty level for a family of 1 in 2019 is $12,490, or a little over $1,000 a month, $1,041 a month. But additional family members can up that benefit amount, but only the veterans' earnings are assessed, not other family members. A second exception to working and maintaining the IU rating is employment that is considered marginal because it's in some sort of protected environment, maybe a family business or a sheltered workshop, or it's presumed that additional support is in place that allows that individual to work, and that without those supports, earnings might be reduced or employment may not be possible. So those are a couple exceptions here. Oh, I should say too, also specific guidelines have been drafted for assessing income from self-employment in relation to substantially gainful occupation. There's a VA policy that directs reviewers to consider low net earnings in conjunction with gross income. The inability to make a profit is not only indicative of the inability to engage in substantially gainful employment. Low gross profits may be indicative of marginal employment, but they consider business income, the amount of time you spend working, and the amount of time your service-connected disability prevents you from working. So they do look at self-employment income closely. There is no direct interaction between the compensation amount and earnings. The Veterans Administration does not conduct work reviews, and benefits are not impacted by other income. However, ratings can be impacted by disability reviews, and changes in ratings can impact income. So veterans are often assigned a pre-stabilization rating, meaning that a reevaluation will be conducted once the disability is stabilized and a better assessment of the condition and the impact on potential earnings can be made. So reexaminations are generally scheduled within 2 to 5 years. And it could be assumed that current work activity would be considered in a reevaluation. But once the veteran has received a stabilized rating, work does not trigger reviews. What often initiates reviews after stabilization is a veteran requesting a reevaluation. So those who have a rating of individual unemployability, however, are more susceptible to possible reductions in benefits as the IU rating is contingent on not being able to follow a substantially gainful occupation. So demonstrating that one can work would make them ineligible to continue to receive the increased compensation amount. So that doesn't mean that their benefits would terminate. It just means that the individual would go back to receiving compensation based on their original disability rating. Here's an example. John was originally rated at 80%, which made him eligible for about $1,631 a month in disability compensation. And John's single, he has no dependents. But later he was reevaluated and found to be eligible for individual unemployability. So his compensation increased to $3,057 a month based on that IU. And that's in 2019 figures. 3 years later, John starts his own business and is showing a profit of $30,000 in the first year. Because this is more than marginal employment, he could lose his IU rating and his compensation could return to the 1631 based on the 80% rating that he had, originally been given. But overall, his income increases to $4,131 monthly. $1,631 of that coming from VA disability compensation and $2,500 coming from the profit from his business. And as his profits increase, his overall income is going to increase. So you always want to look at overall impact on income and not just the loss of benefits. Policy specifically exempts certain veterans from disability reviews. Veterans with static disabilities, or those who are over age 69, and those with an IU rating that have had that rating for 20 years or more will not be reevaluated. So therefore, those with the most potential for reduced benefits based on earned income are those with an IU rating who have had that rating less than 20 years. So that wraps up VA disability compensation. And the next benefit I wanted to talk about is the VA pension program. And again, we're just going to cover this briefly. VA pension is a financial assistance program that has income and asset requirements. Those limits are established annually by Congress and are quite strict and include the income of the entire family, including parents or children who might be living in the home with the veteran. Pension benefits paid are the difference between the countable family income and the annual limit set by Congress. So countable income includes earnings, whether that's from wages or from self-employment, disability and retirement pay, and interest and dividends. There might be some unreimbursed medical expenses that can be deducted when calculating countable income, but only if they are over 5% of the annual pension amount. So the benefit amount will vary depending on family size, and it will be impacted by family income. But just to give you an example, the annual pension amount in 2019 for a veteran with no dependents or no other income is $13,536 a year, or $1,128 a month. So it's not a lot to live on, and some veterans might be eligible for additional payments if they are housebound or require aid and attendance services. But a primary thing to remember about pension benefits is that earnings can and will impact this benefit. Because it's a means-tested program, all family income will be considered, and it reduces the pension benefit dollar for dollar. So it's quite strictly means-tested. Eligibility for VA pension does not require a service-connected disability like the VA Disability Compensation Program does. Rather, it's a benefit available to low-income, wartime veterans who are permanently and totally disabled or age 65 years or older. Eligibility is based on income and assets, of course, but know that in addition to the financial criteria, veterans must also meet other eligibility criteria, including a discharge other than dishonorable and meeting the active service and continuous duty requirements. The last program I'll talk about is the VA Family Caregiver Program, which doesn't provide direct cash benefits to veterans, but it can compensate caregivers for services provided to certain post-11 vets. The VA Caregiver Program provides compensation for services provided by caregivers, and veterans must be determined to be in need of caregiving services and agree to receive such services to be eligible. And if eligible, the veteran can designate up to 3 individuals to serve as family caregivers, but only one person can be designated as the primary caregiver, which is important because the primary caregiver is also eligible for medical insurance. So that's one of the big benefits of this program. For a veteran to be eligible, they must be a veteran or a member of the armed forces undergoing medical discharge and have a serious injury that was either incurred or aggravated in the line of duty on or after 9/11. Serious injuries might include traumatic brain injury, psychological trauma, or other mental disorders. The serious injury must also result in the need for personal care for a minimum of 6 months based on one of the following criteria. So it's just one of these, but one is the inability to perform activities of daily living, which might be the inability to dress or bathe or groom in order to keep clean and presentable, or it might be needing assistance to adjust a prosthetic or an orthopedic appliance that can't be done without assistance, or even assistance with walking or mobility, walking, going upstairs, transferring from a bed, those kinds of things. The second one is need for protection or supervision. which might be based on neurological disorders or possibly a brain injury. Some examples might be like veterans who are having seizures, who just may need somebody present with them in case they have a seizure, or difficulty with planning and organizing, or being unable to follow a medication regimen. So it might also include need for supervision due to safety risk, like wandering outside the home or falling or difficulty using electric appliances. There's lots of things that they look at there. The third one is the Global Assessment of Functioning, or what they call GAF scores. And what they're looking, GAF stands for Global Assessment of Functioning, and it rates the psychological, social, and occupational functioning of the veteran. And that's another way that the VA assesses the need for personal care. And the fourth way is through VA ratings, as those with a 100% rating who also receive special monthly compensation, including aid and attendance allowance, will meet the criteria for personal care. So one of those four criteria must be met to establish the need for personal care. The VA also assesses the eligibility of the family caregiver. And to be eligible, caregivers must be at least 18 years old or better. It can be a family member, a spouse or a son or daughter or a parent or a step-family member, or any other extended family member, or it can be someone who's not a family member, but who lives with the veteran full-time or agrees to do so if designated as a caregiver. Caregivers must complete caregiver training, and that applies to both primary and secondary caregivers, and includes training on things like medication management or vital signs and pain control, infection control, nutrition, things like that. And the VA may be able to provide stipends for travel to the training to the family members. So the benefits of this program, the Family Caregiver Program, are, first of all, there's a monthly stipend to the caregiver, which is based on the veteran's level of dependency, how much help they need, and also the number of hours the caregiver assistance is needed. And they look at the number of hours multiplied by what the going rate for caregivers is in that community, and that's how they compensate the caregivers. The primary caregiver is also enrolled in CHAMPA, the Civilian Health and Medical Program through the Department of Veterans Affairs, which is a health insurance program. So since often caregivers are unable to work outside the home or work full-time to receive benefits, this is really a terrific benefit. Respite care can be provided for at least 30 days a year. The VA recognizes that caregivers need breaks and to be able to continue providing care at the level they do. So the three primary cash benefits through the VA then are the VA Disability Compensation Program, VA Pension, and the Family Caregiver Program. And that moves us on to programs through the cash benefits through the Department of Defense. The Department of Defense also pays cash benefits to veterans who have retired or separated from the military based on disability, or who have been found due to their disability unfit for service. So to be eligible, the veteran's medical condition must render them unfit for duty, and vets may be either suspended or they must either be separated or medically retired. So let me see, whoops, get the slide to move here. What's called the Integrated Disability Evaluation System, or IDES, gets at a single set of disability ratings to determine both the fitness for duty for Department of Defense purposes and the level of DoD and VA disability benefits. So prior to IDES, prior to this system, there were two different evaluation systems with different disability rating tools because the Department of the Defense was only looking at the disability that made the service member unfit for duty, while the VA was looking at the combined impact of multiple disabilities. So now, fortunately, there's one simplified system for rating disabilities. This process begins with the Medical Evaluation Board, and this is the medical part of the evaluation process. It's meant to answer the question, does the service member meet the service medical retention standards? And at least 2 healthcare providers review records and medical exams and review conditions that potentially could affect fitness for duty. It's then referred on to the Physical Evaluation Board, and this is more of the personnel portion of the IEDS process that determines if the service member is fit for continued military service. So the Physical Evaluation Board reviews information like medical records and letters from the vet's chain of command, as well as looks at their military occupational specialty to determine how their medical condition affects their ability to perform those required medical duties, military duties. And then the final part of the process is the transition and final benefits. So at that transition stage, service members are found either fit or unfit for duty. And if unfit, they're either separated or retired from military service. And at that point, the VA processes the final disability rating, which then would determine their compensation amount. If a service member is found to be unfit for duty and have a combined disability rating of 30% or less, less than 30%, and have served less than 20 years, they're separated with benefits and receive severance pay based on their base pay and their years of service. So it's a one-time payment. Special considerations are given to those who serve less than 3 years and those with combat-related disabilities. But note that earned income has no impact on severance pay. So veterans who receive this can work without affecting that benefit at all. Veterans found unfit for duty who are rated 30% or more, but whose condition has not yet stabilized, are placed on a temporary disability retirement list. And once on the temporary list, they are reevaluated periodically for a maximum of 5 years. And when the condition stabilized, or at the end of 5 years, they're either returned to duty or they're found to have if they're found to have a stabilized rating of 30% or more, they're moved to the permanent disability retirement list. So while on the temporary list, veterans receive compensation based on their retired base pay, and there are a couple different formulas, but all service members on the temporary disability retirement list are guaranteed at least 50% of their retired base pay. Earned income during this time has no impact on these benefits either. So earned income has no impact on the Department of Defense benefits. But once somebody's condition has stabilized and the disability rating is 30% or higher, one would move to the permanent disability retirement list. So if the veteran has served at least 20 years, they are eligible for retirement pay, even if their disability is rated less than 30%. So compensation amounts are based on retired base pay, just like the temporary retirement list, but there is no 50% minimum. And if the veteran has less than 30 years of service, the benefit cannot exceed 75% of the retired base pay. So, and again, earnings don't have any impact on Department of Defense benefits. There's also called Concurrent Retirement and Disability Pay, or CRDP, which allows retirees who also qualify for VA disability compensation and who have a 50% or greater rating to receive both benefits without offset. In the past, these two benefits offset each other, but starting in 2007, a gradual phase-in started, which allows payment of both benefits without offset. Again, just for those with a 50% disability rating or greater. So you must be eligible for retired pay to qualify for CRDP. And if you were placed on a disability retirement, but you would be eligible for military retired pay in the absence of the disability, you may be entitled to receive the CRDP. And there's a link here with some more information on that. Similarly, combat-related special compensation applies to those who have direct combat-related disabilities and are medically retired. So combat-related special compensation allows a waiver from the offset rules so that veterans who have a 10% or greater VA rating and a combat-related injury can receive both retirement and VA benefits. So it eliminates the offset that would have otherwise be subject to a reduction in military pay as a result of the VA disability benefits. And instead, it allows the veteran to draw the full amounts of both benefits. So veterans can apply for CRSC through their branch of the military. And to be eligible, you must be receiving military retirement pay, have a 10% or greater VA-rated injury that is combat-related, have the potential for military retirement pay to be reduced by VA disability payments. So you must be receiving VA decomp and your payments are being reduced before this applies. And you must be able to provide documentation that the injury was combat-related and was the result of several circumstances, some being armed conflict or simulating war or exposure to radiation or Agent Orange or several other situations. So those who qualify cannot receive both concurrent disability and retirement pay and combat-related special condition, but they can choose which they receive. And the Veterans Administration can assist in helping veterans understand which one might be more advantageous for them. For example, there are some tax benefits with CRSC, which might change things up. So I'd recommend you explore that before selecting which ones might be right for you. And I provided some links on the preceding slides here or right here so that you can get more information on that. Social Security. Social Security Administration provides disability benefits through two different programs, the Social Security Disability Insurance Program and the Supplemental Security Income Program. And these two programs both provide cash benefits, but have very, very different eligibility requirements, and earned income affects them very, very differently. So we'll walk through each. Social Security Disability Insurance, which is the one I think you all are more likely to qualify for, just based on your work history and other things. SSDI is an insurance program available to people who qualify based on their FICA contributions, and it is an insurance program, so it's not means tested at all. Income and assets are not considered in the eligibility process. Beneficiaries most often draw a benefit based on their own work record, but benefits, adjust that a little bit so that light's not shining on your eyes. But benefits may also be based on the work record of a spouse or a parent. So for instance, a disabled widow or widower benefit, if I'm disabled and I'm at least 50 years or older and my spouse is deceased, I might be able to claim a benefit on their work history or their social security number. To claim based on a parent's work record, the disability must have occurred prior to age 22, and the parent whose social security number I'm drawing the benefit from must have reached insured status and be deceased or drawing retirement or disability benefits themselves. and this one's called the Childhood Disability Benefit. There are also benefits available to children without disabilities based on a parent's record up until age 18 or up to 19 if the child is still in school full-time. So there are three basic components to determining eligibility for SSDI. One is reaching insured status. Secondly is meeting the definition of disability. And third, meeting the income test. So we'll look at each of these. Disability insured status. First, to receive payments, the number holder, or the person whose Social Security number the claim is based on, must meet the requirements for insured status. So a minimum number of credits, that are also sometimes called quarters of coverage, are needed to reach insured status. And each year, Social Security Administration establishes that quarterly earnings amount, and an individual can earn up to 4 credits per year. So for instance, the quarterly amount for 2019 is $1,360 of wages or net earnings from self-employment. So therefore, earnings of $5,440, or 4 times the amount here, will allow that person to earn that whole 4 credits for that year. And that's 4 credits per year is the limit. But for disability, for claiming disability insured status, there's also a requirement for recent earnings, meaning that half of those credits must be earned in the previous 10 years, or the 10 years prior to onset of disability. There is an exception in that for people who are blind. So not only did you have to work and earn a certain number of credits, but they had to be fairly recently too. The second part of the criteria is the definition of disability. And the Social Security Administration has a disability determination process that is very, very different from the IDES process. So each state has a federally funded disability determination office that reviews medical evidence and decides whether someone is eligible based on that medical evidence. So to be eligible medically, you have to have a medical condition that is considered severe, meaning that the physical or mental condition is on their list of impairments, or similar to something on the list of impairments that are cataloged in a publication that they call the Blue Book, or that's really titled the Blue Book on Disability Evaluation under Social Security. And you can Google Blue Book in the search field on the link that was on the last slide, and if you want to see that. So for a disability to be considered severe, your disability must prevent you from doing the work you did before. It must prevent you from adjusting to new work, which is always kind of a tricky one, and has lasted or is expected to last at least a year or result in death. So it's not meant for very short-term disabilities. It's for more long-term or permanent disability. SSA's definition of disability also considers both the presence of a severe disability and the impact of that disability on work. So it's a 2-part definition. A person must have a significant disability, but if they're still able to work and perform what is called substantial gainful activity, then they're not viewed as disabled and therefore don't meet the definition of disability. So substantial gainful activity is the term that Social Security uses to measure the value of one's work. And a dollar amount is set for SGA each year, and the person's countable earned income is evaluated against that SGA standard. So SGA is adjusted each year based on the cost of living index, but in 2019, the SGA level is $1,220 if you're disabled and $2,040 if you're blind. So at the time of initial application, if somebody has countable earnings over SGA, it would make them ineligible for Social Security benefits. And we'll talk about in a little bit how earnings over SGA will impact continuing eligibility. So just then we'll come back to that. Some additional income considerations is that notice I said the countable earnings need to be below SGA to be eligible. So there are certain deductions that can lower your countable income called work incentives. And SGA is really more than a dollar amount. It's a decision about the value of your work. So if you receive assistance or support that impacts your ability to work or the value of your work, some of your earnings might not be counted. For instance, if your spouse is helping with marketing or bookkeeping or other business functions to help you run your business, Social Security might consider it an unincurred business expense and can deduct the value of those services to determine your countable income. Or perhaps you pay for items and services out of pocket that are disability related and allow you to work, such as physical therapy sessions or co-payments for medication that allow you to work because they control anxiety or diabetes or stabilize moods or things that if you didn't have, you wouldn't be able to work. So these might also be deducted from your gross earnings to arrive at your countable earned income. For example, if somebody was applying for SSDI and they were earning $1,400 a month, they're a little over SGA, right? So they wouldn't be eligible. But if they had $200 in deductions or work incentives, their countable income would only be $1,200 a month. And now they're under SGA, so they might be eligible, assuming they meet other eligibility criteria. So work incentives can apply at initial eligibility, but they can also apply for continuing eligibility. In Social Security's Program Operations Manual, there is a specific policy regarding pay received while still in military service. So severely impaired service members may, for example, be placed on limited duty status and put to work in a hospital or office mailroom or laboratory, perhaps as part of a therapy program. Or they may be receiving pay that is not indicative of the value of their work. They're still receiving their pay, but they're really not working or not working to the level they were working at. So the controlling factor in these cases is an objective evaluation of the work activity itself and not the service member's duty status or whether or not performed in a formal therapy program. The fact that a therapy program or limited duty status is involved suggests that special conditions or special subsidies may exist, and that will require the adjudicator to consider the real value of the work effort within the military setting and then equate that to the value to similar work in a non-military setting. So there is some special considerations for those who are still receiving military pay. Once a person is determined eligible for SSDI, they're paid a monthly benefit, and that cash benefit, and that benefit amount is based on the past contributions. So there's not a standard amount, it depends on how much was paid in, but the maximum amount in 2019 is $2,861 a month. So being eligible for Social Security disability insurance also makes you automatically eligible for Medicare, although there's additional 24-month waiting period for that from the time that you were actually eligible and receive a cash benefit. Even if a veteran receives medical benefits through the VA, it might be advantageous to have Medicare as well. So that's a benefit of that program. A very important point to note is that ongoing eligibility for SSDI benefits can be impacted by earned income. So this is one that really can be affected by work. And consistent earnings over SGA will eventually terminate you from the program. But it doesn't happen all at once. There's several phases, and earnings are assessed differently at different phases. So just keep in mind that Social Security disability insurance can be affected by work, but it depends on what phase you're in, and it depends on how much you're earning. Other things that you should be aware of is that for self-employment, Social Security, well, with wage employment, they look at gross wages, but with self-employment, they look at what's called net earnings from self-employment, which is basically your business net profit multiplied by 0.9235. And then that gives you your annual net earnings from self-employment, also sometimes called NESI. And then dividing that by 12 will give you your average monthly NESI. So it's a little less than your net profit, as it takes into consideration that wage earners pay half of their FICA, their FICA taxes, and their employer pays the other half. But if you're self-employed, you pay it all. So it has to do with adjusting for that. The phases that I talked about, remember, with SSDI, you either get your whole check or you don't. It's never gradually reduced. So how earning impacts SSDI benefits depends on how much you're earning and what phase you're in. Those two things, how much you're earning, what phase you're in. So these are the phases. All SSDI beneficiaries are first allowed a 9-month trial work period. And these 9 months don't have to be consecutive. And to be considered a trial work month, the beneficiary must earn over $880 a month. And that's in 2019 figures. And these figures go up a bit each year. During the trial work period, beneficiaries continue to receive their SSDI checks regardless of how much they earn. So it's a safety net period that allows people to try out work without fear of losing benefits. So it's a really good safety net. But once the trial work period ends, people move into a second phase called the extended period of eligibility. And this phase is 36 consecutive months, so it's a 3-year block, where you continue to receive benefits if your earnings are under SGA. And again, for most people with disabilities, that's $1,220 a month in 2019. But if your earnings exceed SGA during the extended period of eligibility, your benefits go into suspension, which means you don't get a check, but you do stay on the program so that if your earnings go down, you can get cash payments started again easily just by calling Social Security and letting them know that you're no longer working or no longer earning over SGA. So the extended period of eligibility provides a second safety net period where people can work, but they can easily get benefits started again if they need to. I mean, they may still get benefits during the extended period of eligibility, depending on how much they're earning, but once benefits suspend, you can get them going again very easily without having to file a new application because you're still on the program. But in the third phase, which is kind of after the extended period of eligibility, continued countable earnings over SGA can trigger a termination. And termination is different than suspension because now you're off the program. But there's a couple additional safety nets. One is called the expedited reinstatement of benefits, which allows beneficiaries who have terminated to get back on benefits within 5 years of termination through this special program. So expedited reinstatement of benefits prevents people from having to reapply and having a long wait period again. So while earnings can definitely impact this benefit, there are several safety nets that help in the transition to self-sufficiency, including being able to keep Medicare coverage without extra premiums for close to 8 years after the end of the trial work period. So there really are some great safety nets there. There are some public disability benefits that offset SSDI payments. but VA disability compensation is not one of them. So veterans can be found eligible for and receive benefits from both programs, and payments don't offset each other. So being eligible for one program, however, does not guarantee you're going to be eligible for the other one. It is possible that the VA could determine, that their disability criteria is met, but that Social Security does not find the person eligible. And even if the veteran has a 100% permanent and total rating, they still may not qualify for SSDI if they are working or have countable earnings over SGA at the time of application. I wanted to say too that Social Security has a Wounded Warrior program that provides expedited processing for military service members who became disabled while on active military service on or after October 1st of 2001. So just know that it should be kind of a simpler process for you. SSI, or Supplemental Security Income, is also available through the Social Security Administration. And SSI provides a monthly cash payment to individuals who are elderly, blind, or disabled, and who have limited income and resources. So currently the resource limit is $2,000 for a single individual. So it's fairly strictly means tested. The federal benefit rate this year is $771 a month. Some states have state supplements, but only a few of them, usually the big states, California, New York, I think there's a few more. And with SSI, generally comes Medicaid, which is not only medical insurance, but it provides long-term care services as well. And it also covers dental and some mental health benefits and things that Medicare does not provide. So I'm not going to provide a lot of information about SSI because very few of you watching this would probably qualify, but know that there's additional information in the guidebook. Help available. The rules around Social Security disability insurance and work are complicated, which is why we recommend that people who receive SSDI or SSI contact a benefits specialist. And the Social Security Administration funds a program called the Work Incentive Planning Assistance Program in each state, and that program offers benefits counseling free of charge to beneficiaries who want to return to work. So benefits counselors, who are also called Community Work Incentive Coordinators or CWICs, will meet with you to review your benefits and look at work incentives that might apply. And while they are funded by the Social Security Administration, they help people look at the impact of work on all benefits, including those benefits that you receive through the VA or through the Department of Defense, as well as other benefits that people might receive, like housing subsidies or food or utility assistance, things like that. And veterans are a priority population for Social Security and for WIPA services. So remember that losing benefits is potentially a good thing. It might mean that you're being successful in your business and that you're earning money, but you also want to be prepared for that. So I provided a link here where you can find the Work Incentive Planning Assistance projects in your states. Again, you have to be eligible for Social Security benefits to utilize this service. But if you go to this link, you can type in your zip code and it can help you find a benefits planner near you. The last thing I wanted to talk about was VA policy sources. And there's a number of sources. The United States Code, the Code of Federal Regulations, what's called WARMS, or the Web Automated Reference Material System, and POMS, or Social Security's Program Operations Manual. And the reason that we want to cover these is because sometimes people hear different things, or they get mixed messages and they just want to know, like, where do I get the real story, right? So let me just review this. The U.S. the United States Code is a compilation and coding of U.S. federal laws, and authority comes from enactment of laws through the legislative process. And Title 38 of the U.S. Code focuses on veterans' benefits. The Code of Regulations, which is a more frequently cited source, contains regulations interpreting the enactment of laws detailed in the U.S. Code. So the CFRs are often cited as authority in policy manuals. A CFR is a higher authority than a policy manual. And again, Title 38 of the CFRs is titled Pension Bonuses and Veterans Relief. WARMS, or the Web Automated Reference Material Systems, is a policy manual. So it provides guidance to counselors and other representatives working in the VA system. And it's meant to interpret the CFRs into specific policy practices. And I provided the link for WARMS there. And similarly, POMS, or the Program Operations Manual, is Social Security's policy manual. Sometimes it's very helpful to kind of become familiar with relevant policy before meeting with representatives from the VA or from Social Security. Sometimes it might be helpful to take copies of policy. What happens is sometimes things get done in certain offices and people assume it's policy, but it's really just office practice. So really knowing what the policy is can be helpful, and it can really help clear up some things especially if you're hearing conflicting messages. So what I'm going to do is I'm going to flip here and I'm going to walk you through where to find information. And in this case, this first case, we're going to look at the Code of Federal Regulations. And excuse me for a second, I'm going to flip out of this and get into here. And I'm just going to Google, sorry, give me a second here. I'm just going to Google EFCR, which is ECFR, Electronic Code of Federal Regulations. So it's really easy to find, and it's all available electronically. So this pulls it up, the ECFR. And if I go here, I'm going to go to Title 38, Pension Bonuses and Veterans Relief. Okay, so I'm going to go here. Sorry, my computer is a little slow today. Try that again. Let's try that again. Okay. Generally, the kinds of questions that I often get they're often around ratings and individual unemployability and things like that. And most of those can be found in these first part, the 0 through 17. So if you click on that, you'll come up with this list, and you'll see that Part 4 is the schedule for rating disabilities. So I'm going to take you here for a minute to show you kind of what this looks like and what kind of information you can find here. The first subpart A, is on general policy ratings. So there's some things in here that we've talked about that might be of interest to you. Like for instance, total disability ratings or total disability ratings based on unemployability, what we called IU, or individual unemployability. So there might be some things in this first section that you'd be interested in. Here's that combined rating table that we saw that shows how multiple disabilities change your VA disability rating. But under that, in subpart B, is the actual schedule for rating disabilities. So it's divided into body systems. Like you'll see here, the first one is musculoskeletal, followed by organs of special sense, which is vision, impairments of the auditory acuity, infectious diseases, et cetera, et cetera. So it's broken down by body part. But you'll see that the last thing within each section is called the schedule of ratings. So here's schedule of ratings for muscles, schedule of ratings for the eye, schedule of ratings for other sense. And we're going to go down. I'm going to show you an example that's based on, where to go? For, there, excuse me, cardiovascular system. So again, if I go to the very bottom of the cardiovascular system, the last thing will be the schedule of ratings. So within that, you can see kind of if you are being rated or evaluated, what people are looking at, what the medical professionals are looking at, and in what kind of rating that might give you. Now, sometimes people think that maybe that they have an additional disability that hasn't been rated, or maybe one that hasn't been rated accurately, and they might want to look at having that reevaluated, and you can certainly initiate that process. But sometimes I tell you, it may not make a difference in your compensation amount. So that might be a factor in whether you want to go through that or not. The other thing it might do is help you see if you are rated accurately. So I'll give you an example, and I'm going to go down here to 7117. Let me go a little further. This was, a veteran that we were working with through the Entrepreneurship Camp for Veterans program. Had something called Raynaud's disease, and Raynaud's is it's a cardiovascular disease. It's a disorder that affects the blood vessels and blood getting to the surface of the skin, especially in the fingers and the toes. So in this case, this gentleman had been rated at 60%. And you can see there's different ratings based on how serious the Raynaud's syndrome is. So his rating was based on, having in effect 2 or more digital ulcers and a history of characteristic attacks. And there's some more criteria on how they evaluate that. But in his case, the Raynaud's gave him a 60% disability rating, but he had also been eligible for individual unemployability. So while he had a 60% rating, he was being compensated at the 100% level based on IU. So in helping him plan for starting his business, taking into the consideration that he may lose that IU and his compensation might go back down to the 60% disability rating. But when we actually looked at the criteria here, it's really, he should have been receiving 100% based on the Raynaud's because he had a couple of fingers amputated, which made him eligible for the 100% rating. So when he went to work, by getting this changed so that the 100% was based on Raynaud's and not IU, it meant he kept his full VA disability compensation when he went to work and started earning money. So you can see how things like that would be really important. That, in summary, we've talked about 3 main government programs that veterans with service-connected disabilities may be eligible for. And I'd like to summarize by just reviewing some main points. That first, government benefits can help you get your business started by providing income that can help support you and your family, either for a time-limited time or an extended period of time, and by potentially making you for eligible programs that can help you pay for business startup costs. And we'll walk through those in the next lesson. Some public benefits offset each other and some don't. And I've talked about the offset rules for some of the main programs, but if you're receiving or may be eligible for other benefits, such as VA pension, supplemental security income, long-term disability through an employer-paid insurance program, or any other disability benefits, you may want to come talk to us or connect with a benefits planner in your state. Some benefits are impacted by earned income, but not all of them. And know that Social Security disability insurance and VA compensation, um, even if it's based on the IU rating, are two benefits that don't impact each other. But if you do receive SSDI or IU, individual unemployability, those are two benefits that could likely be reduced or suspended due to earned income. So again, losing benefits isn't necessarily a bad thing, but you might want to plan for that. So that's when, contacting a benefits specialist might really help you to kind of prepare for that. So thank you very much for listening. And remember that the guidebook that I mentioned in the beginning of the session is available online. And if you'd like additional support, please let your contact at the Institute for Veterans and Military Families know, and they'll connect you with us. And we'd love to talk to you if we can help. So thanks very much, and enjoy the rest of your day.